Hello, welcome to FOMO Consulting. Today we're going to discuss AMC stock. We're going to do a comparative analysis around the Volkswagen Infinity squeeze from October 2008 and the hopeful AMC short squeeze we are all eagerly anticipating. Hopefully you'll like the information, and if you do, please like and subscribe. I would surely appreciate it. Let's get into the video. So, brief update on today's action. We were down today. The entire market was down. Obviously, it was disappointing, broke our recent trend of green Mondays. We are at $8.62 at the time of this recording. We are down just about 3 cents after hours. We could be flat green at the end of around 8 o'clock. We'll see. But obviously it was a disappointing day. Hopefully tomorrow will be better. I think we all understand what was going on today. If you looked at the chart, there was a heavy selling pressure, likely short ladder attacks, you name it, we got it today. So let's look at the Volkswagen Infinity squeeze. Let's look at a few key stats and some information leading up to that squeeze and what occurred. I think we can get some better perspective around our current situation with AMC. So if everyone remembers, especially if you were an adult at that time, in October 2008, especially late October, we were in really bad shape from an economic standpoint. The housing market crash was occurring, bad news, horrible news every single day. The stock market was tanking, bankruptcies, foreclosures, banks failing, auto manufacturers needing bailouts, including GM, bankruptcy with Chrysler. I mean, it was just a bad situation. So the timing around the Volkswagen Infinity squeeze was quite interesting. Obviously, if you were proficient in shorting stocks, that was a pretty good time, right? So to see a squeeze in that environment, I think took a lot of people off guard. Certainly me. So it was an interesting time for that to occur. And again, I think it was somewhat strategic in its timing. So getting into kind of the nuts and bolts, Porsche announced an increase of ownership in a press release, basically over the weekend on 10/26/2008, October 26th. What was interesting around that is, think of that in today's terms. How often do we get like major news that drops the stock market over the weekend? Not very often, not to that magnitude. So that was certainly interesting timing, and again, it was strategic based on the DD and the articles that I've read. So another interesting fact is prior to October 2008, 55% of shares were already unavailable. They were already mostly owned by Porsche. They had a large stake, I believe over 30%. 5% was owned by index funds, and obviously other retail traders and what have you. So it was already widely known 55% of the shares were unavailable for trading, based on my due diligence. So when Porsche decided to increase their stake by 44% over that weekend in their press release, they did so with multiple purchases of cash-settled derivatives and multiple European brokerages to increase stake by 44%. Sounds familiar, right? I know there's a lot of Redditors, YouTubers trying to figure out how in the world AMC, GME, and others are being shorted, even when all the evidence suggests it should be going up, correct? So some interesting similarities there. One excerpt from one of the articles I read, I would like to read real quick. It is clear that heading into October 2008, around 55% of Volkswagen shares were already unavailable in the market for any realistic purpose. As a result, when Porsche increased its stake by an additional 44%, it meant that the true available float went down from 45% of outstanding shares to just about 1% of outstanding shares. So once they increased their stake to 44, or increased it 44%, literally 1% of the available shares, available float was available, which sounds eerily similar to AMC these days, correct? Suddenly, the seemingly low short interest of 12.8% turned into a massive supply and demand imbalance. Millions of shares needed to be bought immediately, even though there were simply no shares available to be sold. Again, sounds eerily familiar. With all the due diligence going on Reddit, Wall Street Bets, Twitter, YouTube, I mean, it's increasingly similar. Another excerpt from the article: just to ensure that short sellers fully understood the urgency of their calamity, Porsche made sure to include in its announcement a few words to address the short position. Porsche stated that they had, quote, decided to make this announcement after it became clear that there are by far more short positions in the market than expected, end quote. Porsche also added, quote, the disclosure should give so-called short sellers, meaning financial institutions which have betted or are still betting on a failing share price in Volkswagen, the opportunity to settle their relevant positions without rush and without facing major risk, end quote. Boy, wouldn't we like someone to issue that statement today, right? So that was a very interesting tactic by Porsche to basically warn the shorts, get out now or forever hold your peace. So that was an interesting scenario. One other excerpt from the article: despite the disarming choice of wording, the statement from Porsche had precisely the effect that anyone would have expected. The announcement triggered a mass panic for the exits by anyone who was short shares of Volkswagen. Porsche also made this announcement on a Sunday when the market was closed. As a result, the message would be widely disseminated at a time when short sellers would have zero ability to cover their positions until the market reopened. Again, how sweet would that be? But again, also very relevant to what we are going through today. So let's review the results of those actions and some of the key data leading up to the squeeze and the results of that. Volkswagen, for that day on October 28th, became the most valuable company in the world per market cap. The intraday price went to $1,191 a share US, I believe 1,000 euros. Just absolutely ridiculous for that time. And again, remember, this was in the very middle and probably the worst part of the financial crisis, the housing crisis here in the United States. The result of that, and try not to cry, the hedge funds lost $30 billion in that single day. And I quote from this article: on the other side of the trade, the hedge funds who had sold their Volkswagen short quickly saw their collective losses exceed $30 billion. Hedge fund managers were, quote, literally in tears on the phone, end quote, as they described a, quote, a nuclear bomb going off in their faces, end quote. Again, relevancy to today, I think anybody with half a brain, including a smooth-brained ape, knows that AMC is heavily shorted, GME is heavily shorted, and they are playing with fire, and it is inevitable with the FTDs, with the synthetic shares. This is going to pop, and it is going to be catastrophic for the ones that shorted and stayed in too long. And I think, in my opinion, this is going to be an epic squeeze if two things take place. If AMC truly has diamond-handed holders and not cubic zirconia holders, and sees this thing through. Additionally, there are no shenanigans like what happened in January with the shutdown of trading on certain platforms, or there's no political timeouts or bailouts. I believe that this will, from a percentage standpoint, could equal the Volkswagen Infinity squeeze from a percentage standpoint. Your call on how much money that is, and how many, tens, hundreds, whatever. Everybody has a prediction. But I think we all stand to benefit from this, assuming that you're in and intend to stay in and see it through. Again, this is not financial advice. It's just my personal opinion. One odd thing that came out of it was there was some litigation around Porsche, of which nothing really ever came from it. There were accusations being made that Porsche, was acting quote unquote as a hedge fund. Ironically, Porsche was standing up for their investment. They were protecting Volkswagen vehemently against the shorters. And again, today, looking into the details and into the data, we have increased by 3 more institutional owners in AMC. So let's briefly go to the summary. So for the summary for AMC. So right now, in comparison, we have 100% ownership. Obviously, retail is 8.5. We are the vast majority of the owners of AMC, without a doubt. Utilization rounding is around 96% currently. It was a day of record shorting, as documented by several YouTubers, Ortex, and other individuals that are posting different screenshots and different information, which is very, very appreciated. But again, it is record shorted to the highest level it's ever been as of today. Again, as a comparison, not to the 2008 crisis, but we are in a very shaky, uncertain market. We are in the recovery mode. Investors are worried about inflation and treasury bonds and all these different things. We are in a very fluctuating market. However, there's no doubt especially the tech sector, has taken a beating over recent weeks. So there's a lot of short interest out there in various capacities, which would again be somewhat comparable just from an economic standpoint to where Volkswagen was in 2008. There's a huge amount of positive social media sentiment around AMC stock. So essentially, we are playing the role of Porsche, I believe, in my opinion. We are protecting AMC from the shorters. We are protecting our investment by buying and holding. We are increasing our ownership daily. Everyone that buys one share, is no different than Porsche increasing their interest by 44% on a Sunday, right? Again, 366 institutions per Fintel have bought in and are increasing their positions daily. I'm a big believer personally in following the smart money, and 366 institutional owners buying in, increasing positions, I do not believe are going to be wrong. I think they mostly are playing the long game, as evidenced by nearly 70% of all options are call options currently. There are 131 million shares on loan. So going back to the Volkswagen equation of basically being 99% owned to the float, I think reasonable estimates believe that there are hundreds of thousands, if not millions, of FTDs, synthetics, God knows what else out there above and beyond what we know about. There's a lot of estimates, a lot of really good due diligence, but the truth is we don't know. But I do believe it is reasonable to assume it's a very high number based on the evidence that everyone is finding and unearthing. Yes, just like Porsche and Volkswagen, they are carrying, AMC is carrying debt from 2020, not overcomable, but there is reason for shorters to believe that AMC cannot recover. The economy will not return to normal as fast as they can make money. They are using that carried debt as an excuse to short it, amongst other things, streaming services, and you pick it. So again, very similar to the Volkswagen situation, where the auto industry was taking a beating in the housing crisis. You know, the entertainment industry, the retail has all taken a beating over the last year. Again, it's just a matter of time before all of this recovers 100% to pre-pandemic levels. So in summary, you know, both stocks were essentially 100% owned. Short interest is very high, especially with AMC. It's well documented at this point, depending on where you look. There's a number for everybody. Market conditions are downward and shorts are taking advantage. A lot of today, for example, obviously was a bloody day in most stocks. I know my personal portfolio was red. Again, tech sector has been taking some hits lately, and SPACs took a hit last week. And so, yeah, there's a lot of downward pressure on the stock market right now. The economy is somewhat struggling to recover. Obviously, there are COVID spikes, but the world, the country is reopening very incrementally, very systematically, including AMC. Many theaters are at 50% capacity. Some are at 25%, and it is increasing by the day. I believe that some of the international markets will recover very quickly. We have a lot of great titles coming: Mortal Kombat, Ghostbusters, Suicide Squad, you name it. A lot of positive momentum from that perspective to drive interest and continue to drive interest in the stock. Institutional ownership is increasing daily, not only in buyers, but also increasing positions. The one thing that AMC needs that Volkswagen certainly had is a very big catalyst. We need one big match to light the fuse, to send the rocket to the moon, to Mars, wherever you want to send it, full of apes, including me. We need the one big catalyst. Is that the May 4th vote? Who knows? Is that the share count audit, the findings from that? I believe that might be one major catalyst. DTCC, NSCC, SEC, all the different rules and regulations we're so anxiously awaiting for approval on. All these different catalysts. But the one thing, you know, we have a CEO that embraces the community, embraces the apes, embraces the support, and I believe fully that this CEO will do everything to protect the retail investor that has protected AMC for the last year or more. So I hope everyone liked the video. You know, do your own due diligence. There's some great articles out there. Do your own research, but I do believe that there are more similarities than not between the Volkswagen squeeze and the potential AMC squeeze we are eagerly anticipating. I believe all of the factors are lining up. All of the statistics are similar. Again, I believe we just need a catalyst. So if you enjoyed this video, please like and subscribe. It's a newer channel, building it. If you like the content, I'll continue to put out more, but I do appreciate the support. Leave a comment. And again, I hope everyone has a wonderful day, evening. Thank you again for watching. Have a great day.